When I first started in the early 70s, you could use a 10-day moving average and make money. It was just very simple. And as the markets became more active and more people joined, and everybody has a different opinion or a different purpose, they take money out, they put money in for different reasons, that adds this underlying noise to the market.
Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Hi, this is Andrew Swanscott from Better System Trader, and we are up to episode 84. Glad you could join us. One of the biggest challenges we face as traders is strategies that either fail or experience a reduction in performance over time. Now, there are a number of possible causes for this, one obviously being changes in the markets. And as we've just heard at the start there, that was Perry Kaufman speaking. He was explaining the change in the markets and how they've become noisier over time with an increase in erratic movements up and down. This increase in market noise can have a huge impact on trading strategies and particular trading styles too, and we're going to hear a little bit more about that from Perry today, including how market noise has changed over time and what it means to different markets, how to measure the level of market noise, the impacts market noise has on particular trading styles and how to adjust strategies accordingly, and also how this information can be used to our advantage to determine the type of strategy that suits a particular market. So let's take a listen to Perry.
Markets have changed a lot. I guess it's a combination of technology and participation. Technology obviously has speeded up things. People from all over the world can access the markets now. When I first started, it wasn't that way at all. But the participation is much greater, particularly in the US, where everybody is invested in the market in one way or another. And that trading has changed things, so there's much more noise in the market than there used to be. When I first started in the early 70s, you could use a 10-day moving average and make money. It was just very simple. And as the markets became more active and more people joined, and everybody has a different opinion or a different purpose, they take money out, they put money in for different reasons, that adds this underlying noise to the market. Now, for a trend follower, that means it's harder to tell when the trend starts and when it stops because you have to wait till the move is big enough so that it's not considered noise. For the mean reversion trader, it's a little easier because it broadens the short-term area where they could make money doing the opposite of what the market's doing. And so I think that's the direction it's gone. It could be interesting to the listeners that when a new market comes on board, like a country with a stock index, it is very easy to trade with a very short trend program because they represent what our markets were in the 1960s and 70s. Very low participation, mostly commercials, and they tend to have very strong trends. And you can watch them as they get participation over a few years. They become not so easy to trade with the short-term trend, and you have to extend the period of your trend out a little to avoid the noise that's developing in that market. So if you rank all of the index markets in the world, you'll find that the US markets are the noisiest. And in this case, noisy, I'm measuring with my efficiency ratio, which measures how much back and forth movement there is given the net change over time. So the US markets are the noisiest, followed by most European, and then Asian and Latin America, South America. So the markets that are newer, less developed, less participation, will have stronger trends. Now, that's a useful piece of information because if you're developing a trading strategy or trying to decide how you trade them, the markets with the most noise are best traded as short-term mean reversion, and the markets with the least noise are trend following. So it can be very useful for defining your strategy. And just to qualify it, it doesn't mean that from time to time you won't get a good trend. Like our index markets, which are notoriously bad for trend following, were fabulous from 2009 up to last year. But they are not normally good. But every market has its period of trending and its period of non-trending. But in the big picture, the index markets are not good for trend following programs. The best ones would be the short-term interest rates, the longer interest rates, FX. I perceive these as driven mostly by Fed policy. So the long-term trends are developed because of the way the Fed feeds in interest rate changes, which tend to be very slow and over time, which obviously affect the interest rate markets. Secondarily affects FX because money flows to those markets with the highest rate net of inflation and political instability. And then lastly, to the index markets, which are much more complex and reflect interest rates, but in a very complex way.
So some great insights from Perry there on market noise. If you'd like to hear more from Perry, we've been really lucky to have him on the podcast twice already in episodes number 10 and 46. So you can listen to those again on the website bettersystemtrader.com or whichever way you like to access your podcasts. Now, we have a brand new podcast episode coming out at the end of this week, which I'm sure you'll find valuable and you'll enjoy. So I'll catch you for that one in just a few days' time. Thanks for listening to Better System Trader.
Thanks for listening to the Better System Trader podcast. The next step is to head over to bettersystemtrader.com for more expert tips, practical advice, and exclusive content. Catch us next time for even more great ways to improve your trading here on Better System Trader.